Hey everyone, my name's Andy. My channel's Finding Value. If you like making money, you want to join the winning team or the underdog, however you want to say it, subscribe to the channel, give me a thumbs up. And this content here, it's about ratio investing. And I've gone over this before. This was a favorite amongst a lot of people. This is basically explaining how ratio investing works and going through an example of when you could swap metals. I do have a real world example coming up after this clip of some examples of when I traded my metals personally. I'll go over that, but this is just we'll call it we'll call it example. So you guys get familiar with ratio investing with physical precious metals. So let's jump in the presentation on ratio investing. I can show you how to do it. This is just how to do it. So some of the given information. So let's say we begin with $10,000. You start in the year 2000. That's roughly when I graduated high school. Use all 5 metals: gold, silver, platinum, palladium, and rhodium. Those are all available to trade. And I'm going to show you what I look at when I do physical metals trading. I'm going to show you what I would consider ideal buy points and the ounces as we walk through this example, so you can see exactly what I'm looking at. So it's the year 2000. I randomly chose the year. And the year 2000 is where all these red circles are. So we have to determine what is the cheapest metal that we want to purchase. And when you look at this, we want it to be on the outer ends of the spectrums. So this is in the middle. So rhodium and platinum, it's in the middle. They're kind of evenly valued. There's no big, push to one side. Platinum to palladium ratio. So when it's low like this, platinum is the cheap one. Whenever it's down on the bottom, you want to choose the numerator, not the denominator. So the numerator here is platinum, and platinum is the one that we want to go into at this point. This one's in the middle, so gold and silver. I'd say silver is a little bit on the cheap side here. And then platinum to silver ratio. I would say this is on the cheap side for silver. So if platinum's cheap to palladium and silver's cheap to gold, and if silver's cheap to platinum, that means silver's the cheapest metal of all of them. So silver's the one we want to purchase. And at that time, silver was an average price of $5 in 2000. Remember, we're using average prices. I'm not using the peaks and the bottoms. I'm using flat out averages for the entire year. So if we have 10,000 divided by $5 average price is $2,000 ounces of silver. So in 2000, we have a nice crisp 2,000 ounces of silver when we first started. So we know where we're going through, we're monitoring the ratios over time. And remember, this is just an example. And we notice that something changes. Rhodium gets cheap to silver. And this is the historical basis at 100 ounces. This is roughly a cheap area to be swapping metals at. So we said, okay, we're going to swap our silver into rhodium. This is also rhodium to palladium, saying that rhodium's cheap in relationship to palladium, rhodium's cheap to gold, and rhodium's cheap to platinum. So it's basically saying that rhodium is cheap to all the metals. And we have silver, and silver is cheap to rhodium. So rhodium is a smoking deal because whenever the metals are cheap to all the other metals, that is when you want to definitely transfer into it. And it also says that rhodium is cheap on a historical basis against all the metals, just like platinum is today. But rhodium, killer buy right here. So we want to swap our silver to rhodium. Remember, it's 1 ounce to every 100 ounces roughly. So ratio is 97 ounces silver to 1 ounce rhodium. 2,000 divided by 97 is 21 ounces of rhodium. So we own 21 ounces of rhodium. It's 2003. That's what we have in our hypothetical financial education swap. It's 21 ounces of rhodium. So we continue to monitor the ratios, and rhodium becomes expensive against, it's expensive against silver. It's expensive against palladium, and it's expensive against platinum, and rhodium is also expensive against gold. So rhodium's expensive against everything. We don't know what the cheapest one is yet. So we need to keep looking at the ratios of other metals against other metals to see, because rhodium's expensive against everything. We want to know what the cheapest metal is to swap into. So we have the option to swap into any metal we want. We just want to identify what's the cheapest. So we start looking at the other ratios. Gold to palladium ratio, that's pretty good. Palladium to silver, palladium's cheap. Platinum to palladium, palladium's cheap. Rhodium to palladium. So palladium is by far the cheapest of all the metals by looking at the ratio charts. It's cheap because if palladium's cheap to platinum, it means palladium's cheap. Palladium is cheap to rhodium. Palladium's cheap to silver. And palladium is cheap to gold. So it's cheap against all of them. That's the one we want to pick. So we swap our rhodium to palladium. The ratio is at 1 to 17. So we've got 21 ounces. 21 times 17 is 357 ounces of palladium. That's what we own in 2007, 357 ounces of palladium. So then we continue to look and monitor to see when this will get expensive, palladium. So we notice that at 2016, palladium to silver ratio, rhodium to palladium, whoa, that's way cheap. Gold to palladium, and then platinum to palladium. The cheapest by far is rhodium. I mean, that's down in the dirt. So we want to swap our palladium to rhodium, and we do that. So we swap our palladium to rhodium. It's a 1-to-1 relationship. This is a huge steal of a deal in 2016. So we swap our palladium to rhodium. It's 357 ounces of rhodium that we have in 2016. So today's price and conclusion. That's 20 years of trading precious metals. Not a single transaction of platinum or gold over this period, just as an FYI. We did mainly palladium and rhodium transactions, which are platinum group metals. We have 357 ounces of rhodium. The dollar amount is $5 million. The return is 38.6% return, annualized. And right now, we've got platinum that is cheap against palladium. We've got rhodium that's expensive against platinum. We have platinum that's cheap to silver, and we have platinum that is cheap to gold. So platinum at the current time is cheap in relationship to all the other metals. And one thing I also want to show you is that we have 357 ounces of rhodium. 357, and we would still hold it times 24,100, I think is what it was. We would actually have $8.6 million from $10,000. Doing swapping of precious metals only, physical precious metals. 8.6 million. That's what it would be today. Platinum is the cheap metal right now. It is stinking cheap. So right now, if you want to play the physical precious metals game that I did in this financial scenario, I would be looking at platinum, and silver's cheap too. Those are the two metals that I like. Those are the two metals that I hold. Those are the two metals that I'm using right now to play this game, the ratio investing game, where you're swapping metal to gain physical ounces in your possession. And notice that when we went through this scenario, we went through this, we'll call it educational example. We didn't talk about dollar price at all. It was just ratio versus ratio. There was no dollars involved until the end, when we calculated it back into a dollar price. So remember, there was no inflation, deflation problems here. You just swap it when it's cheap, swap it to another one. And there are underlying market conditions that underlie the differences that move these things back and forth. Right now, I don't know if I'd be swapping rhodium yet because the market deficits are so large in rhodium. But I would be keeping an eye on the rhodium to platinum ratio because platinum's cheapest against all of them. And maybe I'd start cost averaging. I should say I would start slowly swapping the metals from rhodium to platinum, very slowly, even though the deficits are there. So that's what this scenario is. It's that scenario, and I know looking back is 2020 vision. Looking forward, I think platinum, since it's cheap to everything, is the metal to go into. This return was probably like 50 or 60% per year now that we're up at $8.6 million. I didn't do the analysis, but it was 38 point whatever to 5 million. And it's almost another double on that. So if you guys like this physical swapping game, this is just an example of how to do it. You can create a ton of wealth. And remember, if you're investing in these other companies, you're going to have that return is going to have to beat this. So you're going to have to take a lot of risk in order to beat this swapping game. And even if you just use gold, silver, and platinum, like the three major metals, you can still make 20% per year, 14%, 15% per year returns without all the risk. So you can make a pretty good return without taking the risk. Now, if you are going to take the risk, you're going to have to beat those returns, because if this is the returns of a low risk proposition, why would you take all that other risk? You're really going to have to swing for the fences, in my opinion. Otherwise, I would just play this game, which is what I do. I just play this game and I don't have to worry about anything. Inflation, deflation, I don't care. Doesn't matter. The dollar's is irrelevant at this point. If you guys like this content, subscribe to the channel. Give me a thumbs up. Help me out. Leave comments below if you guys have any questions on this content. Thanks for listening. This is Finding Value.